This channel started with over-the-counter penny stocks, hence the name OTC. Some of you guys might not know that, but I noticed that there has just been a ton of money rolling into the over-the-counter penny stock market. Specifically, it's over double what it was just a year ago. And so I wanted to kind of talk to you guys a little bit. I saw that some of you were asking questions about it. Some of you were even searching me out. I'm here to give you 5 simple tips on how to become a better penny stock trader. These are going to be guidelines that you could really use as just from a fundamental standpoint. They're going to be pretty basic. So if you're just getting into the penny stock game, these are going to be key components to your trading game that you're going to need to follow every single time you make a trade. So the first tip that I'm going to go over is your need to understanding share structure. And share structure is essentially just the amount of shares that make up a particular stock. It could be in the form of outstanding shares, authorized shares, all of that. But really the most important thing that's going to matter to you as a retail trader is going to be the float, which is the amount of shares that can be traded freely amongst all of us. And why it matters is because the lower the amount of shares in the float, the more radical a stock could move. You could have something as small as 100 million shares in a stock that's being traded at 1 penny, and that's going to be something that is a super thin share structure that will propel the stock one way or the other rather quickly without a whole lot of buying or selling going on. On the flip side of that, there are share structures out there that are in the billions of shares, and you could be trading it at 0.008 cents per share. It will be really easy to buy up a couple million shares, but it's going to take hundreds of millions of shares to be bought up to actually move that stock. So it's really important to understand share structure, the price, and how it might move related to the price, the amount of shares that are available to be traded. Now, the easiest way to figure that out, to at least figure out the float and the share structure, is to go to otcmarkets.com, search your favorite ticker, the ticker you're looking to trade, and then go to security details. That's going to give you a nice clean breakdown of that particular share structure. That's the easiest way to determine how many shares are available to be traded in the float. Number 2 is going to be reading a balance sheet. Know exactly how to read a balance sheet and what that actually means. So when you go to check out a particular penny stock, you're going to want to know how much convertible debt they actually have. Remember when I was talking about share structure and why that matters? Well, if there is a particular share structure that looks nice and thin, you're going to want to make sure that there isn't a whole lot more shares coming down the pipeline. Many companies and many stocks at this price range need a lot of capital or a lot of money to continue to do the things that they want to do. And sometimes it can cause problems. A company might take out too much debt, then they have to convert a lot of shares, which then slows the growth of that particular stock when it comes to it being bought up. That frustrates investors, and they really don't want anything to do with that. So if you pay attention to the balance sheet, you're looking at convertible debt, convertible debentures, all that good stuff. And you can see in this screenshot here that I have taken, this is the kind of stuff that you want to take a look at. If it's a large amount of money, and I'm talking even into the mid to hundreds of thousands of dollars, it will significantly impact the stock down at this level. Number 3 is going to be know what catalysts you're looking for when it comes to trading penny stocks. Down here, in most cases, the number 1 catalyst that's going to take place in penny stock land is going to be reverse mergers. Now, you guys might have heard this recently, especially with the height and hype of SPAC plays in larger cap stocks, but reverse mergers have been a thing in OTC land forever. And so that's probably the main catalyst that most over-the-counter penny stock traders go after. They're searching for clues as to what penny stocks could potentially be going through a reverse merger. And one of the first clues that you would actually look for is reinstatements. So you would want to go to secretaries of state to try to find those reinstatements. And once you see reinstatements actually pop up, you're going to see a pretty decent amount of buying coming right in as soon as that reinstatement goes live. There are 3 key states that most reinstatements come from as far as over-the-counter penny stocks are concerned. It's going to be Nevada, Wyoming, and Florida. There are many others. Delaware could be in that conversation as well, but those are the 3 main ones that you're going to want to take a look at. Now, to be able to find out which stocks that these tickers are domiciled in, as far as the Secretary of State is concerned, that also will be found again on otcmarkets.com. You're just going to search their profile and you'll be good to go there as well. Number 4 is going to be risk management. And I think this should go without saying, but there's a lot of you guys out there that are looking for a penny stock to change your life or your zip code in some form or fashion. So I think this is an important topic to talk about, is managing risk. knowing that you shouldn't be taking your whole account and putting into some penny stock is vital information. You really should know not to do that, but I feel like I have to say it anyway. How you buy stocks and sell stocks is super vital as well. Before you buy that stock, know what kind of losses that you're willing to walk away from, because the losses will happen. It's just simply unavoidable in penny stock land. And so if you're using money to buy penny stocks with, it has to be money that you're willing to lose. And it can't be, your rent money or your grocery money or anything like that. So make sure that you guys are understanding that part of it first. The second part of risk management is the other side, taking profits. I can't tell you how many times I've had people come up to me and they were up 300%, 400%, 1,000% or more and never sold anything. And the eventual rug got pulled, and then they ended up having to sell that stock for a loss because they just couldn't bring themselves to take profit. Remember, unrealized gains are not real gains. The money isn't yours until you sell it. There's going to be thousands of other stocks for you to trade in your trading career, and that particular one, while it may continue running or what have you, those are going to be so rare, those life-changing stocks, that you just have to continue to manage that risk and manage your profit taking accordingly and having a plan, which leads me into my next step. Step number 5, in case you haven't guessed it, is having a plan. Knowing exactly how you're going to buy and sell a penny stock before you actually push the buy button is going to be crucial for you. Scaling in is going to be super important here for you as well. So having a plan on how you want to scale in. I always talk about anywhere between 20 and 30% of your actual position size that you want to scale in at. And there's a couple of reasons for this. This kind of ties into the risk management side of things, but also there's liquidity issues that you have to deal with here. It's not like trading Tesla where you can take tens of thousands of dollars and dump it in on one order. You have to scale in because of the lack of liquidity in penny stocks, meaning the lack of cash going in and out of these things isn't a whole lot. So you want to buy a particular stock that you're looking at in chunks, and then you also want to sell in the same fashion for the same reasons. Liquidity is going to be a problem, so you're going to find it very difficult to try to trade tens of thousands of dollars in one particular order. So you're going to want to know how to scale in and scale out of this thing, because it goes back to what I was talking about earlier as far as managing risk is concerned. You're going to maximize profit while also minimizing risk by scaling in and out of stocks. Let's just say that you take one partial amount that you were planning on putting into that stock and it doesn't go your way. Well, it takes a lot. It's going to take a much less of a hit than if you're going to buy the entire position size that you're looking for, if you're going to try to do it all in one shot. Also, as far as the plan's concerned, I was a little bit all over the place as to where I wanted to put this piece of information, but it's pretty common in penny stock land to double your position size. Even if it's just $500 or $1,000 here and there that you're doubling, that's still a lot of money, and you want to protect that capital. One rule of thumb that I always have is that if you do end up doubling your position size, sell half of that. Take the money that you put into that position out of it, so that at that point you're just playing with house money, and whatever you sell it for after that point is going to be 100% profit dollar. Having a plan to protect capital as soon as possible is going to be absolutely crucial and absolutely key. It doesn't have to double if you don't want to. You can set other parameters for yourself, which is why I'm saying to just have a plan. You don't have to do exactly what I'm saying to do. That's just kind of something that I always suggest people do, because doubling your position size actually isn't all that uncommon in over-the-counter penny stock. You could even do 50%, so that when you're up 50% on something, that you're going to take your capital out of it and let those free shares ride and see where they take you. Either way, having a plan, knowing how to scale in and out of, and protecting that capital as soon as possible is going to be super crucial, and that is going to be the most important and last thing that I talk about when it comes to trading penny stocks for beginners. So let me know in the comments below which one of these steps actually resonated with you the most. If you're just starting out in penny stock trading, was there something here that kind of resonated with you? I want you to leave comments down below, because I might be expanding on this topic and I want to know what direction to go to. So let me know down in the comments below. All right, speaking of comments, as always, I'm going to read a comment from our last video, which was kind of calling out some of the other YouTubers, saying that we're in a bubble, or there is fear of us being in a bubble, or that the stock market is going to crash in 2021. And I came out and basically made some arguments as to why I don't think that's going to happen. It's easy to play both sides of the coin here, but I went and just chose a side, and I say that there is not going to be a crash at all in 2021. And Franco Toma in this comment actually brought up some good points. He said, "We just had a crash in March. Interest rates are at zero. How can there be a crash at zero interest rates? That's never happened, and that's true. And I also want to continue this conversation, so leave me some comments below there as well. But there just never has been a crash 2 years in a row quite like that. I'm not saying that there can't be a correction, which is, a 10% drop from our highs. So that's definitely still on the table. But an all-out crash just makes no sense. That's just not going to happen, in my opinion. There's too many good things going on that it involves the economy growing and opening back up. Plus we have stimulus coming in. You add all these things together, the stock market, in my opinion, is still going to go higher. And I think that we actually see a melt up situation in 2021. Let me know what you guys think about that below. And thanks for the comments, guys. If you comment below, your comment might just show up on the next video. So make sure you guys do that. Also make sure you're liking and subscribing. Thanks guys so much for tuning in. As always, I'll see you all before the bell. And B Smith is out.